I'm now short the stock market because the dead cat bounce scenario that I shared with you just yesterday, yeah, that worked out essentially perfectly. I shared with you yesterday I was looking for a dead cat bounce on the S&P 500 up to about the $5,634, $35 level. Came right up there. When it came up and peaked it just a little bit, I said to my members, hey, I'm going short and I'm very happy with it. Doesn't mean that it has to keep going down, but it literally started to come down from there. So I'm now short the stock market, not a huge position, but I am using leverage. On the S&P 500 here, it would be continued to be more bearish if we can break and confirm below 5,504 and then below 5,457. So watch those levels. I didn't open up a huge position with this because I have no idea how the emotional herd are going to react to Trump's tariffs tomorrow. Who knows what Trump even does with the tariffs? Does he keep them on? Does he keep some of them off? I don't know how it will ultimately turn out. So I did use leverage in my position, but I didn't use a ton of money. On the NASDAQ 100 QQQ, remember yesterday when I said the dead cat bounce could come up to about $475 a share? Well, it just about did. And at least as of 2:49 this afternoon, coming back down. So that's great. Yesterday, we did not confirm the breakdown, actually, so we are still rocking an unconfirmed breakdown below $475 a share. If we can close meaningfully lower in the market tomorrow, maybe we can confirm the breakdown. If we can confirm the next breakdown below $462 a share, that would be even more bearish. Watch those levels. So I hope you've been paying attention. This worked out really, really well. Are you short the market right now? Let me know in the comments. Remember a long time ago, back yesterday, when I shared with you that the Atlanta Fed had revised their first quarter 2025 GDP estimates down and that they were in negativity? Well, they're even lower today. The new estimate is down to negative 3.7% for GDP in the first quarter 2025. When you adjust for gold imports, which have been off the charts, I'll show you that in a second, even that revision is down to negative 1.4. So just 2 months ago, they saw the GDP growing by 3.8% over that same period. They say that the revision lower is due to some recent economic data that came out, which shows a slowing in spending. For all of you that think this is a healthy economy, it's not. So again, the gold imports and exports have been so massive that the Atlanta Fed actually has to take them into account in their GDP rating. It's wild. Gold prices are up 70% since October 2023 and have made 52 all-time highs in only the last 12 months. Tons of gold purchases like this only happen inside of periods of economic weakness. Be careful, my friends. I want to thank the Kabasi letter for these two pictures. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC. Interestingly enough, the Federal Reserve Bank actually keeps track of the job postings listed in the United States by Indeed. Now, this is really bad for the economy. The job postings on Indeed in the United States haven't been this low in 4 years, literally going back to April of 2021 when we were coming out of COVID. You think that's a sign of a healthy economy? A weakening economy? We're already in a bear market. Means lower stock prices, my friend. Please wake up. This is a bear market. West Texas Intermediate crude oil down a little today after being up big yesterday on the out of nowhere news that Iran took over 2 oil tankers. So obviously that's not good for the price of oil. But other than those wild black swan events, oil prices should come down. I am still short West Texas crude. What do you think? Are we in a bull market or a bear market? Let me know in the comments.